Hey, good morning, everybody. Rick here with Hit and Run Candlesticks. Today is Monday, May 15th, 2023. I do want to remind you to check below in the chat down there. You'll find a link for a trial for 30 days for only $24.50 when you use the coupon code, okay? Click on the link. You'll see one of our web pages. You'll see that 50% coupon code down there. So, again, good morning. All right, hey, let's get ready. In about 10 seconds, we're going to start looking at some charts. Hey, good morning, everyone. Hey, Christopher, Carla, Mai, Bob, Carol, JW, Steph, Julie, good morning. Good morning, everyone. What is it, Monday, May 15th, 2023. Glad to have everybody here. All righty. So I've got the Qs up. Let's just start there. Qs are actually the only thing that I see that's really trending as far as the indices go. You can see it. Our little green dots here, they're trending up. You can see over here that price is clearly above those little green dots. I sound like I'm right on the mic. Huh. Well, we'll worry about that in a bit. Thanks. I'll work on that. You can see how the price is trending above the trending or the T line, which is the black line, and the black line is above the green dots here. Nice bullish trend. Compare that to the diamonds. Much different look. Diamonds seem like they're controlled by the sellers. In fact, a little choppiness through here, but right now the trend really looks down on the diamonds. So we've got this battle between the Qs and the diamonds. All right, let's take a look at SPY now. SPY's not a whole lot better because where price is above the T line's above the trend indicator. Well, I have to give it to the bulls. But if you look at the chart, all we're doing is moving sideways. Chop, 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 chop. So keep that in mind when we're trading today. There may not be a lot of big movers. Well, there may be. I guess they're only worth talking about if you're in them. If you're not in them, well, there's no sense in worrying about it. So, and they will be far and few between until the SPY starts to break out or break down. And I'll take either one. If the market wants to be bearish, let it be bearish. I'd be more than happy to put some shorts on. FNGU is a chart that I think is probably the most important chart to follow right now. Because if it wasn't for big tech, I doubt we would be going up here. At least that's what it looks like from my standpoint. So we had this move to the downside. What is today? Monday, so there's Friday. Friday moved down a little bit. Today, it looks like we're opening up on an inside day. Whether or not we're going to stay there or not, that's the big question. What I would really like to see is a little bit more of a pullback. Then we can see a buy signal in there. Then maybe we can go after some charts, looking for some nice swings to that upside there. All right, let's peek at a few charts here. Let me move this over so it's not my way. There we go. GRWG may be setting up. Here in the last, good week or 2 weeks, we've been talking about this. Charts that pop up, that gap up, and then pull back for a buy opportunity. That's what's happening right here. Here we've gapped up, and now we're pulling back, and we're possibly setting up for a buy opportunity. And what I really want to be looking for is that setup in here. And the setup usually requires more than one candle here. So what we need to see is that one candle establish itself, and then we need to see kind of a pause, a rest, and then the bulls come back in. When they come back in, that might be the deciding factor that this is ready to buy right here. The first candle, though, I don't think I would chase it. UNG, for those that's been holding UNG, let's see, 1, 2, no, this is not it. This is it. For those that have been holding UNG, it may be time to get paid. I think I'm going to get paid today on it. This is one that I've been holding. And let me do something here. All right. How's that? Did that sound change by any chance? I think that may have helped things. All right. So watch that 50 period moving average on UNG here for a tag. And most of us that have been holding it, for some, that'll break you even, and others, that will put money in your pockets. Another one is LMND, that's following that same path, that path where we're up and we pull back here. Just remember on the pullback, we need a buy pattern. Let's do this. You know, take a bullish engulf. What if today, well, let's say today ends up with a doji and tomorrow we actually put a bullish engulf in there like that. That is the buy pattern. Now where we want to buy it, where the tradable bottom is actually on this breakout. Now I know that going to be a whole lot of people get in early, and that's okay. Put your stop in there. But this is the actual tradable bottom right in here. So price pops up. Now we can start putting our stop in and trade from that breakout area like that. And that would set it up very, very nice. Another one is Meta. Meta is still in the game here. Meta is still moving sideways, but holding bullishly. Here's the weekly chart on Meta. And Meta still looks like it may come up and attack about this 300 mark up here. So there's still room on Meta. Here's the 200 period moving average on Meta right there. Might be hard for you to see maybe, but it's right there. And you can, this is a weekly chart. So you can see where price is kind of stumbling up here. That happens when price meets up with a major moving average, even mediocre major moving averages. Something like that will happen. It doesn't mean it fails. It just means it has to find a crack to get through it. And right now, Meta just might be finding that crack to get through it. Fubo. Here's Fubo doing that. Gap and trap. So here we are. Rally and up. And by the way, it doesn't have to be a gap. That's just something we've been chasing a lot lately and talking about. It could be a simple move like this, where we just run up, nice and simple, and then we pull back. And we want to watch for that trap in there, that trap area, that entry area, right there, with buying price action that suggests the sellers are walking away and the buyers are walking in. That's what we're looking for. So we're looking for that suggestion that buyers are walking in. And right now, that suggestion is not there. But it may be getting close because we're down to the T-line here and because we have an inverted hammer right in here. And we've got, so far pre-market, we've got a nice little double bottom or a tweezer bottom, even close to that, right through here. So it just might be getting ready, but not quite time. Let's see. STEM. We talked about STEM last week, and you can see how any of these 3 days right here, it could have been talked about based on the strategy where you're looking for price to go from a downtrend to flatten out to popping up toward the 50 period moving average. And you can see that flattening out. You can see how we got there with a little gap. Here's your pullback. And here's another little gap back up, holding that trend indicator right there. So STEM is still in the game. XLF still looks short. Targets to the downside are about 31.60, 31, and then around 30 here. You can see the trend indicator, red dots, T-line below that, price below the T-line. No signs of bullishness here. No signs of buyers coming in and changing that direction. And that trend will continue down until buyers change the direction. Chewy's looking pretty good still. Chewy, last week we talked about this a lot. Chewy popped up, hit that 50-period moving average. It pulled back. Okay, fine. And now we've got an inside day here. We're still holding over the trend. We're closer to the trend. Now let's see if that next move up, or maybe next two moves, something like that, might break us through that 50-period moving average and then run up and challenge the 200 up here. That's real possible too. Here's another one I'm going to look at, ERY. Energy is still looking a little sad. Yeah, still looking a little sad. And here's a way to play, be bearish on the energy with a long trade, and that's with ERY. And the ERY is still setting up bullishly. You can see the J hook in here, right there. There's the J hook. And the thing about the J hook is it's a continuation pattern. So when you look at it, come back a little bit and think about what is it continuing. How about that trend? Continuation of that trend. Now, ideally, we need it to break out. We would like it to test, and then the buyers step in, and then that would create the next leg to the upside, right in there. So ERY is looking pretty good. I see CVNA is on my list. This was a big one when it gapped up here. There was lots and lots and lots of talk about it. I wasn't keen on entering it here. I totally admit that. Not my kind of trade. Doesn't mean it won't work out for somebody. Just not me. Well, here it is pulling back. This is me. Now I want to start watching CVNA. Now, I don't think today is going to be the big day. I mean, it could be. You know, the market could explode to the upside, and then that's going to rise a whole lot of sunken ships. So maybe, but I'm going to bet not. Either way, excuse me, either way, I'm going to put it on my hand-and-dandy watch list with LTA, and then when I start to see this thing pop up, I'll be notified, I'll see it, and then I can make that decision to get in that. And that's a terrific looking rounded bottom breakout. And what's even better yet, up to the 200 here is about 60%. That's pretty darn hot. All righty. Welcome to Monday, everybody. Mind your P's and Q's. Remember, too, that while making money might be your big priority, maybe a bigger priority is not losing any money. So keep that in mind, okay? We'll see everybody in about 20 minutes, and we'll get this market kicked off. Thanks, everybody, for being here. I appreciate it. Thank you.